All right, so we are almost at $25,000 here in our dividend investing portfolio on M1 Finance. You can see right over here, we're at 24,447, which is pretty awesome, although the market is still pretty down right now as a whole, but nonetheless, we are still investing. Currently, you can see right over here, our total gains, we're actually down 242 for the day, about 912 for the week, staggering $1,700 for the last month. Quarter's not too bad, about 177 down. For the year, though, we're still up about $3,000 and then $3,080 in our all-time over here. I did start this account with about $100, so keep that in mind when it came to just getting started. So if you're somebody who wants to get started with this platform too, check out the link in the show notes. That is my referral link for M1 Finance. It does support the channel, but it gets you started right away too, which honestly, I just highly recommend. Even if you can put like $10 a weekend, do it. So with the way the market's kind of been lately, I've definitely been buying in a lot more. You can see, so this is my Monday trade right over here. I did about $400. We'll go in there and see all 11 buys here in a second. But late last week, I put in about 300. The day before that, I put in 150, then 200 before that, and then 150 or $120. So I've been putting in a lot more. I don't know when the bottom is. I don't know if it's going to keep going down, but nonetheless, I don't want to be sitting there trying to time the market. So I've been a little cash heavy, a little bit more lately. So I've been able to invest a little bit more, but I hadn't put in all of my money. So that way I could invest more during a time like this. So as an example, with my last morning trade, it was about $403.59. Some of that was, of course, dividends. That's why it's a little bit more than the 400 deposit. So these were all the trades that we did. You could see here we did Home Depot was one of the biggest ones. I let M1 Finance kind of just do its thing and deposit all the money across properly. So that one was $59.81. Then we had Texas Instrument at $37, DLR at $10, Costco at $47. Costco's been down quite a bit actually. We have our S&P 500 fund here at $52. We got about $8.23. Let me clean that up. For Lockheed Martin, we got 13 in Nexar Energy, 35 in Ross, which, by the way, if you are a dividend investor, Ross just recently re-announced a dividend payout. It's about 1% yield, depending on if you buy it now, or if you still had some stock from before, your yield might be higher than that, which is always a really nice thing. Yield on cost is very important for a lot of people that don't understand. Essentially, your yield is based off of how much you paid for the stock at that given time. So even if the stock rises and you're still getting paid out those dividends, your yield on cost is obviously much better than somebody who's buying in at a higher price point. We got 82 going into Apple, so that was actually the biggest deposit. I thought Home Depot was for a second. And then we had Microsoft at $38.92. So looks like a really nice deposit this week. I have 27 holdings, so out of all of that, 11 of them got bought into. Like I said, I just let M1 Finance do its thing here. So like Home Depot, share price was $257. We got pretty much 23% of one share because they do fractional shares, which is always a really, really nice thing. The day before that, let's kind of just see some of the buys here. So this was 13 buys. I'm not going to go over every single one here. You can kind of see them, but we got like the S&P 500 again. We got Apple. We did a decent amount into Amazon, which is really nice because it's really hard to get a full share of Amazon. This one we bought at a share price of $2,967. So that's what? 0.013. That's like 1.5% of a share, so not a lot. What else we had? We had more Home Depot. NRZ got a little love there. We did buy a little into realty income, it looks like. I tend to not buy it unless it's under $60. We got DLR about $20, and then we got a couple other things. I did buy a little into Tesla as well that day. So I'm still really up on Tesla across the board, but nonetheless, still there. So let's go and take a look. Let's go to our holdings here. So here with our holdings, we can see if we click on unrealized gains, some of my best performing are actually Discover and Ally Bank. Based off of the percentages, like these are really, really high returns. Of course, if I knew better, I would have put more in, but I have about 13 shares of Ally and then 7.37 shares of Discover. So if you take a look with, what is this? So yeah, so we're up about like, I thought I had my pen. We have $313 in profit in, if we sold right now, obviously we're still unrealized gains. That's why they call them unrealized, because we haven't sold yet. So we have 313 in gains there. We have 414 in there. So even with Tesla too, by the way, being down as much as it is, I'm still up almost $500 on Tesla. This portfolio, I don't plan to like buy and sell things very quickly. I do that with like my Robinhood account. With my M1 Finance, my big thing is I just want to buy and hold for long periods of time. So most of these companies I don't end up selling. But so those are like the best performing ones across the board. Unrealized gains, for anybody that might be asking here, we're at 2,116, which is about 10%. It was as high as 18, but obviously with the market dropping and everything, I'm pretty heavy in, let's go in here, we can see here. So I'm pretty heavy with Apple. Actually, hold on. Where is the value right over here? This will actually give us a better indication here. So with like Apple, we got $2,600 in total value there. With the Microsoft, we're 2,200. Although those two didn't have as big of a hit as like something like Tesla, but I still had a decent chunk into Tesla. I have a decent chunk into NextEra Energy, and they're actually down on my portfolio as of right now. Not too worried though, because they are again also a long-term play, so that's totally okay in that position. So we got also Home Depot. I've been buying a lot into Home Depot. So if you've been following along here on the channel, you might have been seeing me buy a lot. Let's actually go in here. I'll show you. Like I'm pretty bullish here on Home Depot as of lately. So you can see here, I've just been putting in a lot over the last couple of weeks here, just bigger and bigger chunks. I don't have a lot in them. Obviously, with 24,000 and it being 27 different companies that I have in here, it's hard to put so much into one company, which is like good and bad, I guess. Like I'm not as diverse as some people, I'm probably a little bit more diverse than some people. So I don't have some stocks where I'm just like so heavy on, but it also keeps me from being like too crazy under when markets are like this. So we can see here, let me actually move my picture up a little bit. So we have 4.4414 share or 146 shares right over there. So about 4.5% shares. You can see here, so my average price is 258 and the current market price is 259. So I'm actually up by $1 and some change, which is really nice. Yeah. Total is about $10 because of my dividends too. I've earned about $7 in dividends thus far. So this is a good stock. I like it. I believe in the company. They just recently, if we go into seekingalpha.com here, let's go look at my portfolio. They recently raised their dividend, which is always really, really nice. I'm a big fan of dividend growth, so let's go into our dividend tab. They just changed this all out, so let me see if I can remember. I think it was dividend growth here. So yeah, annual payout growth right over here. So in 2020, they grew their dividend by 10.29%, which is fantastic. The year before that, it was 32%. Can you imagine getting a raise for 32%? And like, check out the rest of these. Like, this is just like insane as far as how much of an increase they do. Now, is it going to continue to happen? I have no idea. I mean, that's anybody's guess. Their payout ratio right now, if we go to this, their payout ratio is 52%. So that's actually really good. That's an indication that they're going to be able to continue increasing their dividends at the same rate. Again, I don't know if they do, that's going to be awesome because my yield on cost is going to keep going up, which means that like what I'm buying in now is just going to become more and more valuable for me, where in like 5, 10, 20 years, like this stuff is going to pay out really healthy amounts, and I'm excited for that too. So for me, I love Home Depot. I've been talking a lot about them, but I also, of course, have like other stocks and stuff like that. Let me move that down. So we got the rest of the portfolio overall. We saw that Ally and Discover were both doing really well. So like I said, I haven't been buying a lot into them when they do very well like that. But if we go into like Discover here, for example, oops, let me actually move myself all the way over here. So I got, like I said, 7.37 shares. My average share price is pretty much $41.69. It's at $97.92. You can see here. So when I first bought into them, it was August 15th for about $3 because I just bought a small fraction. I had a little bit of money going in every week and whatnot. Then the market crashed back in March of last year, and I was just like, you know what? This price point looks really good. I think this is kind of a steal here. And so I jumped up on the opportunity and I threw a lot of money over the next couple of weeks. And then I kind of slowed down on that after a while as far as putting money in. And you can just kind of see here, obviously, it took a nice dive. What was this? In January? Was that the dive of that? And then it's like coming right back up. So, I think I bought a little bit over here at this time period there too, but like that's pretty awesome. Like obviously I just saw the value in it. I saw some opportunity again for this one and for Ally just in general. So this one I have a little bit more. I have about 13 shares. This one I got for $20 a share pretty much, and it is at $43 a share. So almost exact same time frame. Like you can just see all of this happening pretty much exactly the same. Their yield for me is pretty good. Obviously right now it's lower if you're buying in at 1.71, but my yield on cost is higher personally just because I bought them at such a low price point that the yield is much better for me. But it makes it harder for me to want to buy more in unless I want my average to go up, because obviously the more I buy now, the more my average is going to keep on moving up. But we're going to go back over here to Seeking Alpha. Let's go to performance. I like looking at the performance on here. So over the last month, obviously we've been taking some big hits. Tesla, NRE or NEE. You saw on my portfolio, and Apple. Like these were like some of the biggest stocks I have in my portfolio and biggest overall holdings as far as value. So you could see why my portfolio has taken such a big hit. But I'm not worried about it because, again, I am all for the long term. I've been buying a decent amount of Apple still too. And if we flip it to the other side, a lot of my financials like Aflac, Ally, Discover, these are some of the top performances over the last month. Like Aflac 10% in the last month, that's crazy. Like Aflac for the longest time, I'll show you here, was like flat. Like look at this. This was like flat for months. Like it was doing nothing. And then it finally started coming back up. It announced like a 17% dividend yield. So it just like went crazy high on the overall performance, and it just hasn't slowed down since. So happy about that too, but I don't know if I'm like ready to buy more into them as well too, just because of everything going on. Again, I like buying my stocks when they're down. Like it's really weird. It's obviously a good thing in my eyes because if I go to like my unrealized gains, right over here. So we got Costco, our S&P 500 fund, because we just transferred into this one. So it's kind of like if I was holding on to my old S&P 500 fund, which was from Vanguard, I would be in the green still. But because I bought in at a certain time, it just kind of looks worse than it is. We got Texas Instrument, NextEra Energy, Amazon we're down on to, Lockheed Martin, DLR, and Pepsi. So like all of these from here and up, and obviously AT&T's actually in the positive. Like this is such a weird world that I live in right now where like a couple weeks ago, if you like go back to old videos, like I think down on like 3 stocks in the red, everything else was green. And now AT&T was one of those, and now AT&T is in the positive. Like it's just like, what's going on here? Obviously, there's some good news coming out from AT&T. They sold off some parts of DirecTV, I believe it was. So that's going to be good stuff there. But overall, like lots of red, right? So for me, I love buying in, especially when I'm dollar cost averaging, bringing my overall cost down. So like for me, I love Costco, so I'm going to be buying more into them. Let's see where I stand with that right now. So Costco, going in here. So I got about almost $500 in this account for Costco. My average price is $339 and it's at $311. So buying in now is definitely going to drop this down even faster. And I got about 1.6 shares currently. So not a lot. And I get that. Like I know some people will look at that and be like, that's nothing. But hey, look, there's a lot of people just getting started with investing. And so I like showing that, look, I got started too. I buy small amounts. Even with 24,000, I only have 1.6 shares of Costco because I'm trying to diversify my portfolio. Heck, if I go in here, we could take a look here, flip this around. Like Amazon and Google, I don't even have a full share in each of them, but I'm still buying in. I mean, look, granted I'm down on Amazon about $45, but with Google, I'm up $166 because I was able to buy fractional shares. Costco, I only have that 1.6. Texas Instruments, kind of a little bit of a newer stock, so I only got 1.7. Visa, I got barely getting close to 2. Facebook, I got 2. Tesla, I got 2.17. Lockheed Martin, 2.6. Like, it's not a lot of shares, right? But that's one, obviously, because they're higher cost to get in. to a lot of these. Like if you look at their cost basis, they're well, not the cost basis, sorry, the average price right over here. Like some of them were pretty high up there as far as even just my averages, not even including what their current cost is, like just my average. My average price for Amazon was $3,091. Like that'd be a lot of money to spend on one share of a company for my overall portfolio. But in fractional shares, it makes it so much easier to be able to continue to go forward on that. But I think with this one, I got obviously a little bit of a cash balance here, so I'm going to get that going in for the next day. If we take a quick look here, so for those of you guys that like dividends here, let's go ahead and look at just what we've made so far for March here, because March is going to be a good month for dividends. I'll actually show you our total so far. So right here you can see on March 1st we got actually paid from Aflac. So not only are we having a good month with Aflac, but we got paid $5.61 from them, which is awesome. From Visa, also on the 1st, we got paid a whopping 60 cents. So not the best dividend paying out company, but their dividend increases are also good. Then on the 4th, we got Discover Financials. For some reason, it came in twice. I'm still trying to figure out why. Somebody mentioned that some of it might be qualified dividends, which is like long-term dividends, and the other one might be short-term dividends. I'll have to get an official answer from M1 Finance, but together on those two, it's $3.24. Then Pfizer, which I don't own anymore. I actually sold out, but I still had it before the, what's that date called? The record date, I think it is. Yeah, so it was before, well, I just went to Aflac, but whatever the record date was, I held on until then. So I still got that dividend, made a little bit of a profit from them. And then Starbucks, we got paid out $1.74. So if I go into here, this is my, can I like zoom in on here? Let me see if I can zoom in. Okay, so let me zoom in on here. So you can see right over here, I'm like way out of the screen. Hello. So you can see for March of 2021 thus far, we've already made $14.13, which is pretty dope, honestly. I mean, we've already far surpassed what we made in 2020, which was 49, and completely destroyed what we made obviously in 2019. We made 2 cents in 2019. This was actually my first dividend on my M1 Finance account. So that's kind of cool to get 2 cents there, and then now we're looking at 14.13 just like the first week of the month. Still plenty more to come out with payouts. For the quarter, we're at 72.21. We've already destroyed the first 3 quarters thus far, and then we might already surpass the quarter 4 from last year, which is always great. It's always good to beat our numbers from last year. And then what I also like to do is, obviously we're not done with the month, but if we look at where we are for March and compare that to December, because those are both the last month in that quarter. So for every quarter, there's 3 months. There's the first, the second, and the third quarter, or the first, the second, and the third month. And so like the first months I like to compare. So like January, April, July, October, those are all fairly comparable because those companies are paying out at those same times. So we're comparing the third quarters, which are March and December, the most recent one. And that was 45.04. That might be a little tough to crack just because, what was it? Costco paid us a special dividend of $10 per share, which was so cool. So that was a little unexpected. So for us to pass $45 might be a little tough, but I think we can do it. I think with the companies I have left to pay out for this month, let me go to Seeking Alpha and see here. Let's see what's left here. So I like to look at this stuff too. I love paying attention to like my dividends. And I know it's like I'm not needing the dividends now, but you know, in 15 years or 14 years when I'm trying to like use this, that's when it's really going to have a huge effect on me. So I like getting prepared for it. So let's kind of zoom in on this page here. So next up we have for this month, we still have Johnson & Johnson to pay out, Microsoft, Nextera, which I have a healthy amount in as well. We got our monthly dividend income for O. We got Home Depot paying out on the 25th. Lockheed Martin. We got DLR. We got Ross, which is, again, back in business with dividends, and Pepsi all paying out still. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9 more dividend payouts. So I think we can pass how much we made in December of 2020 for the rest of this month. I think that we're looking pretty solid here with all these companies paying out. especially with like Microsoft and Next Era Energy, like we're owning more. Home Depot, I've been buying a lot more in over the last couple of days. Lockheed Martin, I've been buying a lot of over the last couple of months. We got some fellow followers here in the group that are big fans of Lockheed Martin as well, and they've been buying in. So this next dividend payout should be really, really healthy for both of us, which is always a really, really cool thing too. Which, by the way, you should be following along if you guys want to see the impacts that this portfolio is going to have over the course of time, because we're following along this path. We're seeing where we can do with our investing, so that way we can grow it, we can get paid out a really healthy amount every single month, so we can have a huge impact for our financial futures. So like I said, join us in, follow along so you guys can do that. But also to check out my next video right over here, because the more you keep watching, the more you're going to enjoy investing, and the more you're going to want to keep putting into the market as well too. So check that out. My name is Dennis, and I'll see you guys in that next video.